Hello everybody. So today I want to talk about CleanSpark, a stock that I've owned for a long while. Actually predates this bull run. It was in the other bull run that I bought it. I've been adding to it. I was adding to it when it was cheap. I believe it is still cheap considering where Bitcoin is going, and I look at CleanSpark as a long-term hold for me. To me, this is a company who will be akin to gold miners in the future. If you look at companies like Barrick Gold, for example, well, there will be the miner of the future, but the miner of the future won't be mining gold. They'll be mining Bitcoin, and I believe CleanSpark is perhaps the best play out of all of the miners, and you know that by looking at the numbers. So this is a pretty numbers heavy video, although I still use my back of the napkin math style because this channel is my hobby, and so I can't justify spending 3 days on an Excel spreadsheet given the size of my channel. But we'll still go through the math, and I'll still show you why I think CleanSpark is heavily undervalued, heavily discounted. So let's first talk about their 2025 goal, which is to have 50 exahash. As you can see, today they have about 16 exahash. So this is a company who's looking to triple its hash rate by 2025. Now, keep in mind, we have the halving coming, so that doesn't mean they're going to triple how much Bitcoin they mine, but they're certainly going to increase it by quite a bit. And I think by more than double is what's going to happen. I'll show you the numbers in the next few slides. Quickly, the power cost for CleanSpark is about 4 cents. That's 4 cents that they pay for power. It's important to understand power cost. Power cost is the main reason why people want to buy miners and not actually mine Bitcoin at home, because who of us pays 4 cents in kilowatt hour? Nobody. I think I pay 13 cents at my house. If you pay 4 cents, you may be interested in running mining in your garage. But if you don't, you have to use a public miner if you're interested in that sector, and that's what I'm doing. I'm using this public miner. And so, of course, they mine for a little bit cheaper than 28,000 a Bitcoin right now. But based on their prediction, they are thinking that after the halving, so after the 19th now, so after the 19th of April, on average, they're thinking they're going to be paying roughly $28,000 per Bitcoin. That's the cost of electricity. It's going to cost them about $28K in electricity, and the Bitcoin is worth $66,500. So it's easy to understand how you make money in this business, and the goal, of course, is to mine as many Bitcoins as you can and to take advantage of that delta. And you see in March, they mined 806 Bitcoin. Subtract the cost to mine the Bitcoin to the average price of Bitcoin, and you can see the profit that they do. It's noteworthy to say that they are using their cash to finance their operations now, as they essentially sold no Bitcoin in March. They only sold 3 Bitcoins. They mined 806. They're hodling. They're keeping the Bitcoin, waiting for the price to get higher. Now, if you see their efficiency, it's all about an efficiency game, and it's all about the hash rate. The hash rate is expected to go up over time as more miners join the network and as more miners get plugged in and go into the gold rush. But say if you see a gold rush and you have more people mine gold, what happens is the value of the gold goes down because they extract more gold out of the ground. For Bitcoin, that doesn't work like that. For Bitcoin, more people want to go ahead and mine Bitcoin. More people have to share the Bitcoin. The Bitcoin is just getting issued every 10 minutes, and it's a very fixed amount that's getting issued every 10 minutes. And that's the halving for you, right? That's why we care so much about the halving, because right now, every 10 minutes, it's 6.25 Bitcoins that are shared among all of the miners on the network. And it will be 3.12 Bitcoin after the halving. So after April 19th of this year, it will be 3.1 Bitcoin that will be issued. So that will be halved, right? And so when that happens, typically what you see, and I'll get to it in the next slide, when that happens, typically what you see is that old miners get unplugged because they become less profitable. And over time, it becomes more and more difficult to mine. It becomes harder to mine Bitcoin over time. This is an example of the hash rate of the network. How many machines are actually connected on the network in the world, right? That's the hash rate, and you can see this was the halving of 2020, and we had a little bit of a bull run, so miners got connected, but miners eventually disconnected a bunch of miners, and we had a 30% drop in mining difficulty in 2021, and this is something that we should expect. We should expect that it will take a while for miners to disconnect unprofitable rigs, but at some point, perhaps in 2025 or 2026, we should see a minor drop and then up again and up again and up again. So overall, the mining difficulty is going up, and overall, these miners they become obsolete. Maybe in a 4 to 5 year period is their useful life, and then they become obsolete. But nonetheless, we're going to see that they make a lot of money, and you can make a lot of money with these miners. So what happens is, the Bitcoin is dropping, so I've covered that. The fleet, so this is important. When we talk about CleanSpark, it's important to note how astute the managers were. The management was excellent because they've entered into contracts to buy S21, Antminer S21s, which are top-of-the-line mining rigs, highly energy efficient, and they bought them during the bear market, and so they made a huge deal. Let me show you the deal. So this is the miner. They bought 160,000 of these, 160,000 of these miners, and these miners, if you want to buy them at the discount mining store, Mine Shop is considered to be one of the more discount ones. It's actually $4,800 if you want to buy this miner. What they paid for these miners, granted they had to buy 160,000 of them, but what they paid was $3,200 per miner. So they are getting the miner 30% off compared to what you would be getting if you were mining in your garage, and they are also getting the electricity probably 80% off compared to what you would be paying at your house. So we are seeing the benefit of being a major company with scale in the space. They put about 3,200 each miner, by the way. Right now, the current hash rate and the current price yields about $20 a day. So $20 a day, and you pay $3,200 for a machine. That's going to yield about $22 to $23 a day. So this is the fun time. This is where we get to the math. So they expect to receive and install by 2025, in 2025 sometime. We don't know when, but it's going to be as fast as they can. 160,000 S21 miners. That's what they expect to deploy. So, and they paid $3,200 per miner. It costs them about $23. I forgot. I removed that. But each miner makes about $23. I had the cost. I removed it. Anyways, the point is, over a 1 year period, each miner costs what? $3,200 per miner. And then they make what? What do they make? They're going to make about $23 a day for 365 days. So that's $8,395. So it costs you $3,200 per miner. You make $8,395. And so if you do the math on 160,000, you can see that their investment in these miners is going to cost them $512 million, and they can reasonably expect to make $1.3 billion currently with these miners. They currently would make $1.3 billion in 1 year with these miners, and they're paying $512 million. Remember what I told you, the useful life of these is, maybe 4 years, let's say. So the enterprise value, when we look at these numbers, right, we're staring right here at a very real possibility of a 1.3 billion profit, and it's just on the new miners, by the way. And we look at the enterprise value of this company, and we don't understand, because we look at this and we say, oh, it's a $3.7 billion company. So they stand to make $831 million just on the mining on these machines, just on the mining. So if you subtract the cost of a machine, $512 million, from $1.3 billion, they stand to make $531 million just on these new rigs, just on this spot, right? Just on the orange here. And that would mean that they would be trading right now at a 4.4 times forward profits on the new machines alone. So that number should already give us pause as to why this company is so cheap. This company is trading like a department store about to go bankrupt. So I don't understand it. But let me move on. Let's do the full calculation this time, because CleanSpark, remember, is not just about new machines. They have installed machines already, which granted are a little less efficient, and they're gonna have to be unplugged at some point. But they already make money on these machines. So let's go to simple back of a napkin math. Let me just tell you two conditions that I'm kind of ignoring, kind of leaving to the side. So there's potential headwinds, of course. Installation costs. It costs money to build these mining facilities. They are building one in Mississippi. Costs them a little bit of money to do that. And then another headwind, of course, is the mining hash rate. The difficulty will increase. You will mine fewer coins over time. That's why the useful life of this machine is only about 4 years. But there's tailwinds too. There's a leverage, right? When Bitcoin goes up, you have a tremendous leverage on the machine, right? Because the cost of electricity does not scale exponentially. It's still 4 cents. That's the same cost of electricity. But the money you make can go up and the fixed cost stays the same. So you can have very high leverage depending on where the price of Bitcoin is headed. And then we have the transaction fees. This is something that's important to understand. I'm going to largely ignore it in my analysis. But typically when you have a bull run, Bitcoin miners make a lot of money on the transaction fees. So you can see this was 2020, right? The halving right about here. And then we had a good year to almost a year and a half of insane transaction fees for the miners. The transaction fees essentially, 4 to 10x. You had a 4 to 10x the transaction fees, the average transaction fees for more than a year. And right now, the halving is not there yet. We had a little bit of a pre-look as to what it will look like, but it's very likely that we're going to have high transaction fees in 2024 and 2025. These transaction fees are going to be earned by the miners in the form of Bitcoin on top of the Bitcoin that they earn as a reward for the mining blocks, right? As the mining block reward. So I'm kind of leaving these out of the analysis, but keep in mind, I would argue these hurdles, well, at least installation cost is kind of a temporary hurdle. Mining hash rate, we're going to have a little bit of a breather when a lot of old miners get unplugged, but the tailwinds are very strong for this business. The transaction fees, more temporary, but that's still like a nice cash infusion when that happens, and then the Bitcoin price increasing. Who knows where the cost of Bitcoin is going to go? So this is leverage as it gets. This is quite a bit of leverage. So let me try to value CleanSpark today, and this is back of a napkin math, but I recommend you can look at that more complex spreadsheet, but I think I'm capturing the essence of why I own this stock in this spreadsheet. So I'm going to assume a few things. The year is 2025, sometime in 2025. I don't really know when. Probably earlier than later. They have 50 exahash. So 50 exahash today total would yield almost 2,500 Bitcoin per month. However, after the halving, 50 exahash will yield 1,228 Bitcoin per month. That's what it will yield roughly after the halving. And then we have to answer the question, because I told you about the mining difficulty, how much more difficult is it going to be to mine Bitcoin in 2025? So not only are you going to earn twice as little Bitcoin, but it's all going to be more difficult. And that's tough to know. But my question mark is it going to be roughly 70% more difficult? That's roughly what I'm going to assume, and I'm basing that on the basis of what happened in 2020. So in 2020, you had the halving. At about the halving, the difficulty was a 14.7, and it moved at its peak to a 25 in difficulty. And actually, I didn't show it on the chart, but when you go back down here, it moved back down to a 15 for a few months, and then it went right back up. So I'm actually being pretty pessimistic, assuming a 70% increase in difficulty throughout 2025. It might be a little less. It might be something like 50%, but it's not going to look very even, and there's periods that are going to look very spiky on the difficulty, and then it's going to come back down But, the difficulty kind of moves like a stock that's always going up. And so, either way, you may get lucky, but it's going to be harder to mine Bitcoin in the future. That's just to say. And I'm being conservative using 70%. I'm telling you, it's going to be 70% more difficult to mine Bitcoin in 2025. And you are going to earn twice as little Bitcoin as you earn today. Still, despite all of this, I'm getting to a 722 Bitcoin per month throughout 2025 for CleanSpark. So I'm going to assume we're going to make a little bit over 700 Bitcoin per month through 2025. So let's do the math here. Let me just do the math here. So if I do the math, assuming the year is 2025, CleanSpark now mines. What do they mine? They mine 722 Bitcoins per month, or 8,664 Bitcoins total for a full year of 2025. Right? The cost to mine, by the way, based on their number, is going to be about $242 million to mine 8,600 Bitcoin. Based on what I told you about the transaction fees, mostly, but also some of the cash on the balance sheet, I am going to assume, for the sake of simplicity, that the 242 million here are going to be covered mostly with the cash on balance sheet and the Bitcoin sold from the transaction fees that they earn, to make this analysis simple. So we're moving forward now, looking at the price. So assuming in full year of 2025, based on the pretty negative calculations I've given you, assuming they mine 8,600 Bitcoin, at today's price, $66,000, that would be $571 million that they're going to make of money, of profit, Bitcoin profit. That means the stock, enterprise value is $3.7 billion, the stock would be trading at 6.4 times profits of 2025. So you're only trading at 6 times profits. But what's Bitcoin going to be? What's going to be the price of Bitcoin? Well, my view on this is very simple. If you have the halving, if a new daily issuance of Bitcoin is cut in half, theoretically the price of Bitcoin should double. So if the price of Bitcoin doubles, and assuming it's going to be 66,000 at halving, which it won't, I think it will be higher, but assuming it's going to be 66,000 at halving, and if it's a double, what this means is they're going to make 1.1 billion in 2025. 1.1 billion, the stock is trading at 3.7 billion, that's a 3.2x, and then assuming higher numbers of Bitcoin, this is where it gets a little crazy. Right, you're seeing that the stock is trading at 2 times the mining profits from 25, right? So 2.15x the mining profits from 25, or even 1.62x the mining profits from 25. If you assume that the price of Bitcoin is going to be $264,000. Now, of course, if you follow the space of Bitcoin, you know that a lot of the predictions go much higher than 264, but we are not going to go there. We are seeing a situation where I think the stock is silly cheap. It is silly undervalued at 6 times profit. At 6 times profit, it's silly undervalued for that company. This is a company at the heart of a new asset class, at the heart of one of the growthiest sectors, one of the growthiest parts of the market, right? And so should a company in this sector, which is at the edge of technology, at the growthiest part of the market, in a new asset class that is growing really fast. We know Bitcoin is about 80% a year if you go back for the past 14 years. Should it really be trading at a realistic next year's earnings PE of a 1.6 to a 3.2? Realistically, that's 1.6 to a 3.2. Should it be trading this cheap? I definitely don't think so. I mean, as a frame of reference, the S&P 500, it's got stocks like Wells Fargo, etc. That's trading at a 24x. At a 24x to give you an idea. I don't think there's a single company trading this low in the S&P 500. No, there's not. So I don't understand why this company is this cheap. The market clearly doesn't know how to value these companies. And maybe in another video, I'll go to compare it to gold miners and see how they value gold miners. That'd be really interesting. But I'm happy to buy this stock in the $16 range right now when I see how much money they are going to make in 2025. Because, and there's the final things to consider here, and of course, that's cash, right? Well, they're going to keep it in the form of Bitcoin, but that's the Bitcoin they're going to have. That's the Bitcoin they're going to make. Very, very valuable to begin with. But and just for that, I think it's a good reason, at least for me, to go on the stock, just because of that reason. But there's other reasons to own a miner, and these miners are more valuable than most people think. First of all, they've gotten access to megawatts of power at very, very, very cheap prices. And they got this access, back in 2020, 2021. They got all of these a little later for the latest CleanSpark project. But they got a lot of this access in an era where AI wasn't a thing yet. AI was not competing for that cheap energy just yet, right? Now AI is competing for energy. So these contracts that they've earned for that cheap electricity, they wouldn't be able to get those again today, I don't think, because they were able to get it so cheap. So that has value right there. That is not built into the stock. Then the unprofitable rigs that they have, that they're going to turn off, it's not like they're going to, give them away for scrap metal. No, they're going to be able to sell them. There's an entire industry of selling old rings by many of these public miners, right? And so if your rig is not profitable at 4 cents, which is what they pay for electricity, it's still going to be fairly nicely profitable at 2 cents a kilowatt hour. And guess what? There's always going to be someone with free electricity or cheaper electricity. And in the case of these unprofitable rigs in the US, well, guess what? They are still profitable in the Gulf nations that use, gas up flares of oil and gas mining, for example. They're still going to be profitable in Latin America. I'm thinking about El Salvador's Bitcoin mining volcano, right? It's still going to be profitable with that. It's still going to be profitable with state miners. That's one aspect. And then And I'm showing you kind of eBay as a proof, right? I mean, I realize it's anecdotal, but not that anecdotal. Many wholesalers on eBay have thousands and thousands of sales on these miners, especially when you do a buy it now. I'm showing you this. This is the S19, right? This is a 5-year-old miner now. It was selling for a few $1,000. Now it's still selling for about $1,000. And I'm showing you this one, but to show you that there's bids, right? It's not just someone dreaming that they're going to sell it for this price. No, there's actually bids on these machines. So even though the machines are technically unprofitable, like the S19 is technically unprofitable right now, still doesn't mean there aren't people buying them. There's people buying them because A, they have cheaper electricity than most of us, say if you pay 2 cents. That's an example. Or if you're a child living in your parents' basement and your parents don't know that you're mining, that could be another example. And then you have just people who do it out of interest. We have people who find it interesting and they're just gonna mine for fun. They're mining for fun. So there's hobbyists and perhaps this is a more meaningful selling point, and we'll see if one day you'll have to KYC when you sell these, but you still have a lot of Bitcoin maxis, what we call Bitcoin maximalists, who buy these unprofitable miners and mine unprofitable Bitcoin, and they mine it unprofitably because they want to acquire Bitcoin the natural way because you're a maximalist, right? A lot of early days Bitcoiners are maximalists. It's Bitcoin or nothing, and they do it because of virtue and because of value, and they don't really look at it in a more rational, just money way. And so if you're a maximalist, you're going to want to mine your Bitcoin. Okay, and this is another thing that goes for CleanSpark. Let's remember they got their latest miners 30% off the going rate. So you have probably a few $100 million in that call option right there for them. I mean, they got them for cheap. They wouldn't be able to get them anywhere this cheap today. The cost of mining equipment, by the way, changes on the daily, and it's based on the price of Bitcoin. Right, and also it's important to note that Bitcoin miners, some miners hodl their miners. I know it sounds silly because old miners may be seen as worthless today, but if Bitcoin were to reach, say, $300,000, all of a sudden, even the oldest, most quote-unquote worthless miner becomes valuable all of a sudden, because you can mine profitably what you could not mine profitably. And I'll conclude with this. CleanSpark has shown dedication to being a long-term hodler, as we call them, hodler of Bitcoin, and they're determined to holding their own stack of Bitcoin. And so that alone makes the company very interesting to me, because they have their mini micro strategy division, right? Next to the main mining division, they have a mini micro strategy division. And there will be future waves, right? This is a company whose stock is likely gonna keep going higher in 25, and then maybe in 26 we'll go back to Bitcoin 100,000, and people will be like, Bitcoin's dead, and that's a company that I think is gonna keep having very high volatility. But I'm happy to own that stock for the long run, because they're very ready for the 2024 halving and bull run, and I have no reason to believe they won't be ready for the 2028 halving and bull run. So I'm happy to own the stock. I hope this was an interesting analysis, despite it being mostly numbers and finance. I hope you found it interesting. It took me quite a bit of time to make it. Made it for myself first and foremost, but I'm happy to entertain. I'm happy to entertain you, and this is just entertainment. This is not financial advice, no investment advice, just entertainment. I hope you were entertained. Please like, please subscribe, and have a wonderful day.